Corporation is the holding company for the Tata Group companies. And basically, this is not a manufacturing company or a financial service company. It's a holding company where it controls the stake of all the Tata owned companies. So the main revenue and profit for this company basically gets generated from the dividends announced by the Tata company. Now, he can definitely hold on for the next couple of years because prospects for most of the Tata companies look quite promising because they've got holdings from TCS, Tata LIC, almost all the Tata companies are housed in this company. So I think if the investor wants steady returns, then I think he should hold on because typically holding companies, trade at a discount of roughly about 20 to 25% of the fair value of the investments which are, there on their books. So I think my guess is that over the next couple of years, most of these Tata companies across automobiles, IT, these sectors would definitely do well. So if he wants a steady kind of return upside, he should definitely hold on. My sense is that over the next 2 years, if he can hold on, he could expect a reasonably good risk reward because finally, this being a holding company, the value would proportionately increase with the value in the stock prices which they hold in their portfolio. I think I would believe that Mahanagar Gas MGL looks pretty attractive. I think the stock has corrected sharply, and I think this is attributable to all the city gas distribution companies. If you look at Gujarat Gas or IGL, I think the key problem for these companies is that natural gas prices globally have shot up post the Russia-Ukraine war, and I think at least for the next 1 or 2 quarters, raw material prices are going up. But the good part is that all these companies have got good pricing power. They have raised prices to cover up their costs. So I would say that if the investor has a 2-year view, then I think MGL definitely looks attractive. I think very attractive valuations of just about 10, 11 times 1-year forward numbers, and obviously a very strong balance sheet, virtually debt-free, having cash of about 3,000 crores. So I think he can expect good returns provided he has got a long-term view of at least 2 years.
I'm coming back to you on this next one, Avinash, and this is on LIC. We've got a question coming from Hariharan. He's writing in from Trivandrum. And he's asking whether it is likely that this counter will lose ground further. I don't know if that's an easy question to answer, Avinash, but would you say that this is a good level to start entering the stock with a horizon of at least 18 to 24 months?
I think, Alex, insurance is a long-term business, and I think unfortunately, retail investors who applied for this issue have been very majorly disappointed. The dividend has also been very meager. In fact, a lot of expectations were there that the dividend could be very attractive, but unfortunately, that was also not the case. One negative in the near short term would be that a lot of anchor investors who had invested in this company, the lock-in period is going to end in the next, say, 1 or 2 weeks. So I think that could possibly also release a lot of short-term pressure if these investors decide to book out. Frankly, I don't think they would book out at a loss, but if it all happens, then the stock would see a further correction. But I think currently, if somebody has a 2-year view, then I think definitely, LIC is one of the largest players, makes money on every policy. And you can't compare them with, the new generation companies which actually burn a lot of cash. So I think if you keep a 2-year view, I think hopefully the policy business is very strongly growing. They have a large market share, and I think aggression would come in. I think the markets would await more clarity in terms of analyst meet calls, commentary from the management, which I think at the moment is not there at all. So, that's the reason the stock has underperformed. So, I mean, next 2 years, I think I would not be, hesitant to say it could be 950,000 odd rupees, provided one is willing to take a contra call and, given a reasonable time frame, for this kind of investment. I think KPIT, frankly, is a electric vehicle kind of a, classic story which is panning out. They are largely present in the global automotive markets, and electric vehicle is going to be a very strong vertical for them. The stock has corrected significantly from its top, and I would not be surprised that going forward FY23 could be a lot better compared to FY22. My sense is that this business is going to be extremely promising from a 2-year view. So if the investor can take a long-term call, I think even at the current odd levels in these kind of markets, if he can accumulate this stock slowly, he should be able to generate a decent alpha and a good return over the next, say, 12 to 18 months. So definitely worthwhile buying now, but time frame should be at least 12 to 18 months. Alex, you can continue to hold on. See, Kohinoor Foods is a very well-known brand in the basmati rice market, and I think current trends actually predict that the basmati rice market is going to do extremely well in the current year. Overall, I think the Middle East is a very large opportunity, and I think with the rupee weakening, obviously exports are going to realize a better kind of margin for the domestic players. So I would suggest that if he can hold on for at least the next 12-15 months, possibly a price of around 70 to 75 rupees is not completely ruled out. I think he should hold on. My sense is it appears to be a good opportunity, but I think one needs to take into mind that it's a mid-cap counter, so there could be a lot of volatility in the stock. So please keep that in mind and keep a positional view of at least 12 to 15.
Okay.
Yeah, I think Gujarat Ambuja Exports is one of the largest corn producers in the country. In fact, they make value-added starch derivative products, which find applications in pharmaceuticals, into fast-moving consumer goods, snack foods. So I think the applications are endless. We saw that the company produced a tepid quarter in fourth quarter, and that was largely because of the fact that volume growth in this quarter was not as per the expectations of the market. The management commentary has been quite positive. In fact, the expectation is that corn prices have shot up, ever since the Russia-Ukraine war took off, and I think realizations are now, in fact, better. Hopefully, the company should do well in FY23. So the investor, if he, has a 12 to 15 month horizon, can definitely look at buying the stock in a correction, because clearly from a value accretion perspective, the company has a very solid balance sheet, and there are many large, PMSs and funds which are now taken positions here. So I think longer term prospects appear to be quite good.
PNB Housing Finance, is this a good stock to hold, to buy? Would you recommend a fresh buy at this juncture?
Alex, PNB Housing Finance has been one of the larger housing finance companies. In fact, it's the fourth largest housing finance company in India. There is a PE investor, Carlyle, who still holds a decent equity stake, and there have been some news flows that sooner or later, some strategic investor is going to come in here. Most importantly, yesterday there was a news flow that the company is going to raise funds, in the market, and that has obviously, been discussed in the markets, considering what kind of premium they'll raise. But coming to the housing finance market, I think the good news is that interest rates have started rising, disbursements have started increasing. So I would believe, at the current levels, the stock is corrected significantly from its higher lows, and I would believe that somebody who's got a medium to long-term time frame of at least 12 to 18 months could definitely look at this company, because in terms of the book size, in terms of the disbursements, it's a large player. The only caveat is that the asset quality is a little elevated. So I think if one can hold for the next 12 to 18 months, one can expect a decent risk reward. Yeah, I think, the current headwinds in the gold finance market are definitely very challenging. In fact, what you mentioned is right, that not only the public sector banks, but some of the other private sector banks have entered this market, and the management has also commented here, saying that the disbursements in the gold finance business for them would obviously moderate. But you must remember one thing, that unlike the banks or the other NBFCs, they don't have the issue of asset quality at all, because they hold the gold of the customer, and that hardly depreciates. So the business is very safe. And my sense is around 1400 odd levels, the stock has corrected sharply. So in fact, despite competition coming in, my sense is the opportunity size for the gold finance market in India is pretty large, and there is a space for every player to operate. So obviously in the near term, there could be margin pressure for Muthoot Finance, but if you're looking at the next 1 to 2 years, I think this is a great opportunity to build on this gold financing franchise, because I think in terms of the reach and in terms of the size, Muthoot still continues to be the market leader. So I think you can hold on if you've got a 2-year view, but I think in the short term, definitely there would be some pressures on the stock price, because headwinds here are completely, very challenging here. No, I think, my sense is both these companies need to be held on for the next at least 1 to 2 years, because I think tailwinds now in the automotive component space have become quite attractive. In fact, Maruti Suzuki has announced a 10,000 crore investment in the electric vehicle business, which should see vehicles coming out post 2023. And most importantly, after a long time, demand for automotive vehicles has shot up. Hopefully, steel prices have also come off. So obviously, the raw material cost pressures will ease out. So I think if you have a 2-year view, Maruti Suzuki should definitely benefit, not only in terms of their reach and geographical, kind of customer acquisition strategy, but I think the new model lineup would also be interesting. The second company, can you please repeat the name, please?
It is Bajaj Finance.
Yeah, I think as far as Bajaj Finance is concerned, I think it is one of the largest NBFCs in the country, and which enjoys a very strong ROE of almost 18-19%. The good part is that now they have digitized most of their operations, and in the next 1 or 2 months, you could see a lot of activities coming out from their digital app, which they have developed in-house. So my sense is, with interest rates moving up, it's definitely going to be beneficial for them, because they have a housing finance business, a consumer durable financing business, and clearly they have a large amount of liquidity already parked in their balance sheet. So they don't have a problem of funding these kind of increased disbursements. So I think keep the patience, and I think over the next 1 to 2 years, you could see a lot of margin expansion and business expansion for this company. I think in the near term, such businesses are going to be very, high volatile kind of businesses. But in the longer term, I think definitely value could be there. Yeah, I think you should hold on. I believe the tailwinds definitely look to be positive, Alex, and I think you should expect decent returns over the next 12 to
Metropolis, Rajan wants to know what the view is, Avinash, on the fundamentals. Should he buy?
No, I think one should avoid the stock at the current point. I think numbers definitely are going to be extremely bad and competitive in the coming quarter.
Birlasoft, Avinash, I'm going to come to you on this one. Short-term view is being sought. Jeevan Reddy wants to know whether to hold. His average price is 396. Should he apply for the buyback?
Yeah, I think he should apply for the buyback, Alex, because I would believe that the buyback price